So what's going on? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world. So we're going to go into another one of our big short series with an examination of a company called GSX Techedu, right? And so what this company is it's an online education company primarily based in China, primarily serving a Chinese clientele. And so this is going to be a really good video if you're an options trader and you really want to kind of understand the analysis that I a lot of times will go into before I look at taking put positions or put calls. I'm sorry, put positions or put contracts on a particular company. Kind of how I look at things, kind of how I go into things, and what kind of makes us different over here is that we don't just show you the end result of something. What we really endeavor to do is to try to help you get an understanding of what we do, the how, right, the actual mechanism behind what we're doing. And if you watch some of my videos, you can get a lot of this information for free just off my videos. And then if you decide to pay, you can get a lot more in depth. But I really want you to get this understanding, whether you buy the course from me or you buy a course from somebody else. The most important thing to me is that you get the understanding and you just don't get the before and after. Because a lot of marketing is before and after, but they never show you the in-between. And the in-between is where a lot of people miss out when they're just watching before and after videos or they're watching before and after screenshots. So let's go ahead and get into it. So we talked about before, right? This was a company that I ran a put contract on, and I posted it on one of my watch lists, and I told people that this was a pro play. And I meant it when I said it. This is a very, very volatile situation. It's very complex. There's a lot of things going on at the same time. And so if you don't really see yourself as a professional trader and you don't like these kind of scenarios, I wouldn't recommend that a person go into it. However, if you want to start examining how to really take advantage of these very volatile situations and how you can benefit from it, this is going to be a really good example. Because what I really want you to understand is that you can choose the day trade options. That's cool. I don't have any issue with it if that's what works for you. However, there's a lot of opportunity and there's so much opportunity in the market that if you don't go that way, right, you can still make the money that you desire. But for some reason, so much of the market thinks, a lot of it because they come from a job where they really believe they have to trade every day to be successful. And in reality, whales and sharks don't trade every day, right? Guppies trade every day. And that's not to disrespect the people that make a lot of money in the markets. I know people that day trade, they pulling out $50,000 a month. But to be real with you, whales and sharks, right, swing, and guppies trade every day. So let's go ahead and get into it. So this is GSX, right? So we're looking at their chart. And what we're seeing is that, coming out of early in the year, pre-COVID, they was around 25, trading in this range of 25 to 50, right? Kind of went down because of COVID. And then all of a sudden, they started really wild going up. And they got up to around 125. Now, I knew about this company, right? But my biggest obstacle to buying contracts on it was that the options market was not that liquid. And what I mean by the options market being not that liquid is they at the one time only had monthlies. They didn't have weeklies. And the cost to buy monthly was relatively inexpensive. They just added weeklies. Probably I think maybe over the past 2 weeks, they've added weekly contracts. So when they were around the $100 mark, I looked at them, right, because I got some information on what was going on in this particular company, but I didn't see, right, weeklies. I didn't even see like 3-week contracts or 4-week contracts. Essentially, like it was a month out. It was like 120 days out. It was like the time period was so long, and the premium that I would have to buy at that time, I didn't have access to the capital, right? Because my goal is to work myself in a position where I can make 5 or 6 trades a year and be good, as opposed to trading on a regular basis, weeklies and dailies. My goal is to make 5 or 6 really good trades a year and be good for the year. And this would have been a really good opportunity to do that kind of play. So I missed it, but I kept it on one of my scanners to always watch out for it, right? And then I caught it after it did this gap down. So if I would have had the put contract on it, right, when I saw it, it was around August, it would have had to have gone out until October or past October, because what it did was it went from $100 and literally from one day to the next, it gapped down. So it started at 100, the next day it opened up at around $80. So that was a $20 gap down. So if you had at the money contracts at 100, you get that $20 gap down, you could have just exited the play, or if you still had more time on it based on the scenario, you could have stayed in it and kept getting. But we're going to kind of show you why this is such what I call a pro play and why you really got to be careful when you enter in situations like this. The accusations against this particular company is that they're involved in a large degree of fraud, right? And I can send you, and I'll post a link on the video, because I'm gonna put this on YouTube. I'm also have this on Facebook, and I'm also gonna put this in my Discord group. I will post to you a link how somebody has kind of outlined what they believe is some of the fraudulent activity, but it's not just that one particular person. There's a lot of people that think that this particular company is engaged in fraud based on their growth. We talked about before that a lot of people are looking for really, really high growth opportunities. But the challenge is that when you see a company growing too fast, right, and growing too big, too fast, that leaves a lot of alarms, because you got to try to figure out how are they able to do this? How is a company growing faster than maybe what Amazon or Google has grown over the same length of time, right? Because it's rare to see a company that's not a pharmaceutical company go from, $50, right, in June to $131, right, 2 months later. That's really weird, right? It's just abnormal. So that's one of the things that stood out. So here's the link to a guy wrote a letter to the SEC, and it kind of outlined a lot of things that he thought was going on with that company. One of the things that I do know about is that when the market is closed, the American market is closed, they get a lot of dark pool activity that comes in and buys the stock, and they buy these massive lots. And then what that does is when the market opens the next day, it pushes the price back up. And so you get a lot of really weird buying behavior around this particular stock. And I'm going to show you some of that in the chart, where the stuff is just weird. Okay. But they have a lot of institutional buy-in. So one of the reasons why this is a pro play is because you got to believe that there's a floor somewhere, right? They got a lot of institutional buy-in from hedge funds in China. And I had posted an article to one of the companies that owns a lot of this particular stock. So their institutional buy-in is at almost around 60%. They got an 8% mutual fund buy-in, right? So you got to believe that there's a floor. There's a serious floor for this particular stock until, right, the fraudulent accusations can either be determined to be true, in which you're going to see institutions probably leave this really rapidly, or they can be determined to be false, and then you may see even more institutional buy-in. This company currently is undergoing an SEC investigation. The problem is that the SEC has not given us a timetable on when the investigation is going to be concluded, and they're going to issue out some type of statement. So you're essentially just playing a waiting game. But here's some of the institutional buy-in. So they got, Morgan Stanley. You got Goldman Sachs in here at 5%. Morgan Stanley owns almost 10%. Credit Suisse owns almost 7%. They got massive institutional buy-in. I think a lot of that has to do with the United States and their relationship with China. They're investing in a lot of these Chinese firms, I think, just to get along with China. Okay? Because a lot of things that are going on along with this company are weird. Now, they just put out their earnings the other day. Their earnings had gotten pushed back. They put out their earnings on Friday. And so what we saw is that they put their earnings out. They had a revenue around 1.966 billion yuan, which is around 300 million. So this is a 250% year-over-year growth, right? That's not normal, but it may be contributed to the fact that, yeah, we got COVID going on, so a lot more people may want to learn at home, right? But that's a lot of growth in 1 year, right? The paid course enrollments were up around 134%, right? So what we're saying is we're looking at a company that we think is just performing phenomenally. But they said they got a loss of around $142 million, right? And one of the things that they really attached their loss to was they spent a lot of money in marketing. But their marketing budget now is enormous. So they're trying to essentially item out that a lot of money is being spent on marketing, because what they're trying to do now, I believe, is they're trying to justify what's going on in that company with marketing spend, and saying that, well, we're driving a lot of revenue, but we don't have a lot of profit because we're spending so much money on marketing, right? So I think that's what's going on. Now, what you can do now is you can continue to research, because a lot of this information is online. What is the actual study or the actual case study against GSX? What are some of the things that they've been accused to? I know a company that says that they think that the majority of their students are actually fake. And so a lot of their accounting, they believe, is actually fraudulent. And so their whole case against GSX is that their growth and their numbers are actually fake, and it's designed to drive people buying their shares. But in reality, all their accounting is fake. So not only are they fraudulent, but the accounting firm that is doing their books is also engaged in fraudulent activity too. That's a really, really heavy accusation. But the SEC has to come out and determine whether or not any of this is true. Now, so based on me understanding that information, what I did was, when I saw this gap down, right, I essentially bought puts, right, what was pretty much at the money at that time, which was around $70, right? So I bought $70 puts. And if you look at this, when I bought the puts, we saw that between 1022 and the gap down, essentially it just traded around that $70 mark. It traded in this range. Now that's very, very unusual when you see a company gap down like that. The trade in a really tight range. What a lot of times happens is when a company gaps down on bad news, it'll lose value to start pushing its way back up because it'll become less expensive to buy in now. So what'll happen is a lot of people will buy up those cheaper shares or less expensive shares, and it'll start pushing its way back up and it'll start to recover. We never saw that with this. What we saw, my bad, is that it just traded around this range. And so I'm holding this option contract that has an expiration of 11/20. And I'm saying to myself, if this thing doesn't gap down on earnings, I'm dead. And the contract, to kind of put you in my business, the contract was around $800 on the put. And I bought it maybe almost a month and a half out, right? So I bought it around here. So around 10/21, so it was around a month out, my bad. So around a month out to expire at 11/20. And I figured this would give me enough time to exit. But the problem was that they pushed their earnings back, so I didn't exit, right? And so I knew that the earnings was not going to be positive, and it was going to hurt their share price. But the problem is that I didn't really know at that time when they were going to report earnings, and they put out 11/20 date. And I said to myself, well, this thing doesn't gap down on earnings, it's going to hurt me. However, when I looked at my account the day early that week, I had not really lost a lot of options value because the market makers had already factored in that their earnings were going to be bad. And so I hadn't lost so much value that I was really ready to exit the contract. The problem is that if they would have reported earnings when they had scheduled to, which was a week before, I could have exited this contract probably with 100% return because I still would have had time. What happened is theta decay ate up a lot of my contract value. So what we're seeing is that now let's look at the 1 day. It came out, it got down, right? It fell to around 54. I exited on this downward slope. Then it started to walk its way back up to 65. If this thing gets up to 70 again, if I have the capital, I'm gonna come in with another put contract. Because all I'm doing now is I'm waiting, right? I'm waiting for the SEC to actually substantiate that it's fraud. So now we have weeklies. So I would be looking at maybe a put contract, maybe if I can, around July, right? Which pretty much is going to put me in the $2,000 to $1,800 mark. So that I may say, well, I can't afford that. Maybe April. Because what I'm trying to do now is just buy time, right? I know where this thing is going. I just have to find enough time for it to actually take place. The SEC does not give you a timetable on when they're going to conclude their investigation, which I don't understand why. But that's the reason is now we're just trying to wait. So if I can get this thing to go back up, and we're seeing that they're losing a lot of calls and they're increasing on a lot of puts, the IV still really not that bad, right? So if I can get enough time, I know that I can make this situation work because I don't think there's any way they escape some type of bad SEC report. The risk with a company like this, and this also happened with Luckin, the risk is the SEC analysis or the SEC findings can be so bad that they can get what we call delisted. And what I mean by delisted is that they get pulled off the New York Stock Exchange, right? If that happens, I don't know what happens to my contract. So if I'm in the contract and I wake up one morning and they're saying, well, GSX is getting ready to be delisted, I don't know what happens to my contract because essentially the stock is no longer going to be available to be traded on the New York Stock Exchange. So I may get the decision that I want, but get stuck into the position because I can't exit because there's no longer a market for the contract anymore. So this is why I was telling you before that this is very much a pro play, but the same thing happened to Luckin. Luckin was accused of having fraudulent accounting. The SEC investigated. It took a very long time for the investigation to conclude. It came out that, yes, they were involved in fraudulent accounting. And let me see, can I find that ticker for you real quick? Even if it's still up. Let's see if it's still up. I don't know if they're going to still show that old activity. But it came out that they were involved in fraudulent activity. And then essentially they got delisted and then brought back. So this might have been it right here. So when the report came out, they were at 26 and they dropped all the way down to like $6. And then I think here's where they got delisted and then they brought them back. And now they're trading around $4. And if we look at Luckin, let's zoom out. At one time Luckin was trading around $50 a share. I think they got the news of the investigation and you see it fell, went up, fell again, and then the report came out that yes, there was actually fraud. It failed. So if you have put contracts here and that thing opens up at, I don't know, $6, and you got 27 put coming, it's ridiculous. The insurance policies that people will buy to try to protect against that fall, they'll be paying you top dollar. But like I said before, is that these are very volatile plays. They take a lot of understanding. They take the ability to want to deal with a lot of risk because there's a lot of stuff going on in China that you're not going to have any control over. And they're very much engaged in a lot of fraudulent activity in regards to what they do. Not to be disrespectful to them, but I really believe it's part of their culture and how they deal with the United States. They don't have any confliction about engaging in fraudulent activity with Americans. I just think they don't have an issue with it. And so you got to really be careful when you're dealing with these particular corporations. You don't know what they're going to do because they don't operate how we would normally see things go in the United States, even though there have been a lot of United States companies that have also been accused of fraud. But it's easier to wrap your head around it and understand how it's going to proceed because it's American based. When the SEC is trying to deal with a company all the way overseas, it's no telling what kind of hoops they got to jump through to get access to information. So I want to kind of give you an analysis of this, and let's go back to the GSX so people don't get confused and get you to kind of understand is that these are the kind of plays that I say that once you start to realize and believe that, well, I don't have to be involved in the market every day to make money. These are the kind of plays that can take a lot longer to develop, but they can be very, very profitable because like I said before is that I think this thing implodes once the SEC results come out, and you could be looking at a gap down from 70 to 25, right? You could be looking at that kind of gap down, which is where it was at around before they started really picking up a lot of momentum. So hope that this was valuable to you. If you know somebody that's going to be valuable to, share it out. If you have any questions, hit me up in the comments. Let me see, do I have any questions real quick? Okay, so the IV, I think, let me show you the IV on the contracts, Trina. If you can still see the video, I'm not sure who's still on. Let me show you the IV real quick. So the contracts I would be looking at would be around, I would say, let's say April. Let's look at April, right? Around the low to mid 100s. And let's also say the Julys. Those are kind of slim, but I wouldn't take this. I would look into your brokerage account for your open interest, but it's kind of the same. Or if we really wanted to go out, let's say to next year, right? We're looking at kind of the same. So we're looking at open interest that can probably be around the low 100s to kind of mid 100s. But I'll be looking, I'm personally, if I was going to buy, I would be looking to buy as close into the money as possible. I wouldn't be looking to buy out of the money, right? Because to me, that's the safer play and something that is already very, very, very dangerous, right? This is a dangerous situation. It may not go the way we want, but these are the kind of plays that, to me, are high probability, but they're also very high risk. Where you can get into a play that has a lot less probability, but it's also a lot less risk the play is going to go the way you want it to go. But I really want to start getting more into the line of looking at a lot of these type of companies and understanding how many of these companies are actually fraudulent, because normally it's just a matter of time before the company goes under. So if you can just maintain the position, you can put yourself in a position to really make a lot of money. But a lot of times is that you have to have the patience and the understanding that you got to just hold the position and not look to get like a weekly return out of this, because this is going to be something that's going to be very prolonged. But I really believe it's going to go the same way as Luckin. So if you got any other questions, hit me up in the comments. Some people are talking about video issues. You know, Facebook does that every once in a while. Hope it wasn't a problem, but if not, you can just watch the replay. If you have any questions, hit me up. If you know somebody's going to get value out of this, share it out. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.